Hello and welcome to the In Focus series section of Drishti IAS. I am Aisha Singh, and in today's video we will be discussing about the angel tax. What is angel tax and what is angel tax for startups, and what are the amendments that has been made with regard to the angel tax for startups. So first of all, about the timeline. First we'll be looking at the news, then what is angel tax and what are the changes brought by the CBDT, then few of the exceptions with regard to the angel tax, what is the valuation method of it, in the end a prelims MCQ. Topic is of relevance from general studies paper 3, that is economy. From exam perspective you should be able to know what is angel tax and what are the changes brought by the CBDT into it. So the news talks about angel tax for startups. So what is angel tax for startup and what CBDT has clarified after scrutiny notices. So we will be focusing majorly on what is angel tax and what is angel tax for startups. So first of all, let's see that whenever we many a times we hear few of the terms in news. See, first of all, we all know what startup is. So it is a new enterprise trying to build up its own business in the market. For building up their own business, what do they need? They need capital. And do they have the capital themselves? No, they do not. If they would have had the capital themselves, they will grow their business by their own. But mostly people, they have the idea and they raise capital from somewhere else. So when startups go to raise capitals, many a times what happens is that the banks do not give them loan, because many a times the banks do not understand their business model, and many a times the bank realizes that the business model is bit too risky to invest. So banks do not give them the required capital. Then there are venture capitals. Many a times venture capitals also do not give them the required capital. Then many a times who finances them is a term, and that is angel investors. Angel investors can be very wealthy individuals who get impressed by the idea and they think that this idea or this startup can do well in the coming terms, and while giving their capital to this startup, while investing in their startup, they can ask for equity, they can ask for ownership or whatever kind of a deal they want to have. So this is what angel investor is, that very healthy, very wealthy, high revenue or high investment individuals which give capital to a startup. So this is angel investor. And like angel investor, there is a term called angel tax. So first let's see that why this term is in news, then we will be going into the term. So the Central Board of Direct Taxes, that is CBDT, it has stepped up to direct its officers that the officers should not carry out scrutiny of angle tax provisions for startups recognized by the DPIIT. That is, that the startups which are recognized under the DPIIT. So whichever startups are recognized by the DPIIT, their scrutiny or their angel tax provision should not be looked into. And the Finance Act 2023 has been amended, bringing in non-resident investors also under the angel tax levy. So till now in our country, what used to happen, that the angel tax levy was restricted only to the residents of India. But now with budget of the year 2023-24, the Finance Act 2023 has been amended, and with the residents of India, the non-resident investors are also included under the angel tax levy. And this is what is proving, a negative sign for the startups, because now the residents who used to invest in the company on which the tax was being put, now even the non-resident investment which will come into the company, the angel tax will apply on that investment also, or on that raise of capital also. So now let's simplify all these things, that what is happening. We will be looking into what is angel tax, then we will be looking into what are the changes that has been amended, then we will be looking into what are the methods through which it is calculated, and other things also. So first of all, let's talk about angel tax. So the term angel tax or angel tax was introduced in the year 2012, and this was the time when finance minister was late Pranav Mukherjee. So this was the time of 2012 when angel tax was introduced in our country, and this came under section 56 clause 2 of the Income Tax Act 1961. So angel tax was introduced under the Income Tax Act. So this you should remember that it comes under which act. So it was introduced under the Income Tax Act, and the section is 52. So section 52 means angel tax, you can say. And this was done to discourage the generation and utilization of unaccounted money through investment in closely held companies. I'll tell you what does it mean. So angel tax must be paid on the funds raised by unlisted companies through the issuance of shares in off-market transactions. Off-market transactions, if they exceed the fair market value of the company. So what happens, like imagine this is a startup, and the startup thinks that they are doing really well, they have a very good idea and they have a very good product. So what happens in the share market is that the companies are listed, but now that the startup is very small, it is not listed. So it is an unlisted company, but they are very sure that they have a very good product, they have a very good idea, they will do very well. So even though the company is unlisted, what they will do is they will raise money, but still they will raise money, and this money will be much above the market value. So the market value, this amount which they will raise will be much above the market value. Now what happens is, like for example, if the market value is rupees 100, they will raise the shares at rupees 200, so which is much above the market value. It means they are earning per share rupees 100 more. Now what will happen is, this amount which they are earning extra, angel tax will apply on this. See, let's read it again. Tax that must be paid on the funds raised by the unlisted companies. Fair enough. Through the issuance of shares, okay, in off-market transactions, if they exceed the fair market value of the company. So this is what I was telling you. This is what is angel tax is. That if an unlisted company is raising amount above the fair market price, then on that raise which is above the fair market price which they are getting, then on that amount which they are getting extra. So because it is getting above the fair market price, so whatever amount they are getting extra, on that amount the angel tax will levy. This is the meaning of the angel tax. And income tax at the rate of 30% is what is angel tax is. 30%. Like for imagine if it is rupees 100, then 30%, it means 30 rupees will go into the tax. And what was happening was that a lot of startups was doing this, that they were raising money, but the money which they were raising, no amount of tax was paid into it, and the money that they were raising was much above the fair price. So to discourage this practice, angel tax was introduced to discourage the generation and utilization of unaccounted money. So the amount which they are getting extra, it is not accounted through investment in closely held companies. So to discourage this generation of extra money, angel tax was introduced. Now changes brought by CBDT related to the angel tax. What changes has been brought till now? That earlier it was only for the residents, but now non-residents will also be included in this. Like for example, till now whatever money was being raised within the country was included in the angel tax, but what people were getting from outside were not included under the angel tax. So people were preferring outside money. Expansion to include foreign investors. Now whatever money from foreign will be taken, angel tax will apply on them also. So the Finance Act 2023, which is a section of the Income Tax Act, was amended to include foreign investors. Startups raising funds from foreign investors would also be subject to taxation, and this step has not went well with the startup industry, because now whatever amount they will get from foreign investors, they will have to pay the angel tax on this also, which till now was not there. Then few of the exceptions that we will talk about is that startups recognized by the DPIIT are excluded from this provision. So whatever startups are recognized with the government, like I'll tell you, for example, if India has more than 75,000 startups, let me tell you this, only 2 to 3% startups must be registered with the DPIIT. So the startups which are registered with the government, they will be excluded from this provision of angel tax. They won't be included in it. Then the aggregate amount of paid up share capital and share premium of the startup cannot be more than 25 crores. So if any company, the premium or the share premium is not 25 crore, then they will also be included in it. So exceptions are two. Paid up share capital and share premium of the startup, if it is more than 25 crore, then they will be an exception, and if they are registered with the DPIIT, then they will also be an exception. And then in May 2023, the Finance Ministry has also exempted investors from 21 countries. So investors from 21 countries are also exempted from this provision, and those 21 countries, few of the examples are US, UK, France. And then the excluded investment from Singapore, Netherlands and Mauritius also, because these are few of the countries from where since a very long period of time we have received a very high amount of capital or investment. So these are few of the exceptions. Then valuation methods. So there are two different methods, first for resident investors and then for non-resident investors. This might not be asked, but I'm just telling you, you do not have to remember this. So valuation method, for resident investors, the valuation method is discounted cash flow, while for non-resident Indian investors, it can be comparable company multiple method, probability weighted accepted return method, option pricing method, milestone analysis method and replacement cost method. So these are few of the valuation method. Then in the end, a prelims MCQ. Any people need to tell me the answer in the comment section. With this you would know, because it is a PYQ of the year 2019, that how the question is being asked. So it talks about which of the following is issued by registered foreign portfolio investors to overseas investors who want to be part of the Indian stock market without registering themselves directly. So this was, at that point of time, people thought that it was an easy one, but because when people are inside the examination hall, they get so tense that even the easier question becomes wrong. So many people got this question also wrong. So certificate of deposit, commercial paper, promissory note or participatory note. So give me the answer in the comment section. And that's all for today. Thank you so much for watching. Till we meet next time, keep reading and keep writing.